This is one of the most interesting times I've seen. There's going to be amazing companies built that do absolutely amazing things for you. They're coming. The speed and the quality that they can build with now, with all these tools, is just mind blowing. Like, I see a demo a week of something where I'm just, oh my, how long have you been working on that? Some of them come from my portfolio and others' portfolio within GC, and the others are like kind of pitches and things like that. We're in this really fun time, and it's confusing, and it feels like you're in the middle of a hurricane. It's the most interesting time since I've been doing this by leaps and bounds.
Mark Crane, thanks for joining me today.
Thanks for having me, Justin.
Yeah, no, Mark, you're a partner at General Catalyst, and you've been there since 2019, focusing on security or cybersecurity, as well as enterprise. And we're going to get into a bunch of what innovation that you're seeing, as well as, you know, your own insights on how you maneuver through this. But maybe we start out a little bit about setting the table about you. Walk me through your background, how you were born in the backwoods of Boston, if I understand it, and how'd you get to where you are at GC?
Yeah. Well, first of all, thanks for having me. Really appreciate spending the time. And hopefully it's just as fun as having a drink or a meal with you. Maybe probably not as fun, but we'll do that too. So about me, I'm a partner here at GC. Been with the firm for a little over 7 years. I was born in Cambridge, actually. So I guess Cambridge, Cambridge would term Boston as our backwoods. Would probably be what the people of Cambridge would call it. But no, my father is a lawyer by training and is now a district court judge in Lowell, Massachusetts, just north of the city. And my mom is a retired fashion buyer. So basically, the too long don't read is I'm a product of two people who didn't really work in technology. And then I went to college and studied absolutely nothing important other than how to learn. I went to Amherst College in the middle of the backwoods near Boston. I guess that's just the theme for the podcast. That's the podcast title for this episode, Justin. We finished it. We finished it early. A backwoods conversation of trust issues. Yeah. So I went to Amherst, studied not really much. And I guess the way that I've come to this is I was a history major, and actually in venture, it's actually not that much different than writing a history paper. You kind of have a thesis-ish of like something you know a little bit about. You then go do a whole bunch of research, and that research looks very different depending on if it's just a founder in a Google document or it's a very late stage company with multiple products, go to market, tons of customers, and all sorts of different like growing pains. You do the diligence around that stuff, and then ultimately you come to a conclusion whether to invest or not. And sometimes you come to the conclusion like, hey, I don't want to invest, and here's because I found out these X, Y, Z things. So that's actually served me pretty well. At GC, there's kind of two different types of people who are investors. The first, I like to call the people who actually have done things of purpose. So like my partner Quentin or Yuri, they've built companies or worked at very, very large companies. And there's kind of the other half of us who are investors by training. And frankly, that's whether or not you pass the test of do you listen more than you talk? And then kind of you were classically trained in this kind of world, which, I mean, I don't know if we're going to see this world forever with AI, but I was an investment banker. I learned about how companies work and how to buy them and sell them and finance them and all that sort of stuff. And then I kind of fell backwards into being a venture capitalist. And that's kind of where I am today.
I think you skipped over a couple of things. And so if I may,
Sure.
I think your ability to really invest is part and parcel predicated on the jobs that you had. But also, you were a founder yourself of MA Storage, right?
I was not the actual founder, but we bought a self-storage company, which in retrospect was the best experience I had in college. We owned it was a very janky website where no vibe coding platform would ever allow itself to even push this as a V0 sort of website. It was literally a drop down, store my stuff for the summer type of thing. But we had to like rent physical space, trucks, hire people, fire people,
Really?
store random things over the summer, like deal with campus to get permits for things. And then ultimately, frankly, it was the worst investment that I've ever made because there was no intrinsic value or moat around the business. Anybody could create a website and then like go do all this stuff. But we were frankly, the moat was nobody was stupid enough to go and do the same thing. And then we ultimately sold it. I got financing. I pitched my parents and friends and family to let me buy it with a bunch of my other friends. And then we ultimately sold it to the next generation in a similar way. And the fact that we sold it at the end is kind of shocking. But that was my founder journey, so to speak, of running payroll and all that sort of stuff. And it was really, really fun. It was some of the most fun I've ever had.
Well, it's all, I mean, those, maybe not successes, but you got to go through the journey to understand the journey. Aaron over at Box, when I was talking to him about being a founder, he was like, you just got to do it. Nobody can teach you. You just got to do it. And so that's kind of what stood out for me, right?
Yeah. That was certainly it. And then the other, before I was in venture, I worked at a private equity firm. We acquired a company in Ireland and I got sent to go work at the company, and not just work at the company, like create a board deck. Like I answered support tickets. I physically went on sales calls. I went to So that was probably the hardest I've ever worked and also the most rewarding work I've ever done. And I work pretty hard here, but like that was way more rewarding and interesting, to be honest.
Spoken like a true Cambridge, Massachusetts guy. Yeah, that's very good. So you are like a captain of your soccer team as well, right?
Yeah. I'd say what I lacked in, I didn't clod myself before this. I probably should have. What I lacked in athletic ability and soccer ability, I made up for in organizational capability and frankly being really loud. And that certainly was kind of what took me to be one of three captains of the soccer team by the time I was a senior. So.
Well, I can definitely attest you are loud. And as a soccer player, myself, I definitely appreciate it. So it wasn't a slam. It was more to the kindred souls. Yeah, somebody said that.
Yes.
So let's jump in. We are seeing kind of like a really interesting amount of enterprise software culture, but definitely in security, some impacted waves of AI, but maybe just taking a step back, from your investment kind of window, what are the waves of innovation that we're seeing? If you could classify them or bucket them into things, what would that look like?
Yeah, let me just one step back about General Catalyst. Like, we are one of a handful of multi-stage firms where we will invest, for lack of more eloquent terms, from the cradle to the grave, so to speak, of a venture backed company. So literally 2 folks and an idea, or just 2 folks, no idea, all the way up through very late stage growth investing, even to special situations type of things where we think about maybe putting things together, maybe rolling up sorts of things. We haven't done one of those in cybersecurity yet. But certainly that's a type of investing. So basically the way we think about it is the most ambitious, interesting people on planet Earth, we want to be the place they come for unfair advantages. And our job is to make sure that we have the capital solutions in order to match that ambition, right? So part of that, matching that capital with their ambition, is a lot about like figuring out where we are in these kind of innovation waves, so to speak. I would say when I started 7 years ago, it was kind of just fairly simple. From investing, it was kind of like, what's the next SaaS solution to fix a certain thing? And you and I have had this conversation. The way I kind of frame cyber investing for us is you kind of have to make a case. You have to be one of the following things in order to be a venture backable type of company. One is you need to be protecting a new surface area that we have created from a technical change. Now, you and I can debate this, and we have, about whether AI itself is a new surface area that we need to create a new category of cybersecurity platforms, tools, and vendors to be able to protect. I think I would actually take a different, I wouldn't say that's a new surface area on its own. I'd actually say that we can figure out different ways to talk about that. That's one way. The second way is existing surface area. So say, network or endpoint, or we can pick on email. That is being protected in a fundamentally different way due to said technical change. So there is a better, faster, cheaper sort of way to be more effective way to be able to protect that surface area. The third is how do we basically take a massive industry that, look, you and I have been part of, where there are all these vendors, all these different things that do these different things, and you need to be able to stitch them together, usually in some form of professional services and implementation, and then instrumentation, and then actually validating what is coming through and then fixing it. So there's a large kind of services gap. A lot of people talk a lot about it. There's a mismatch between the supply of people that can do that work and the demand for that work. That's been a very well publicized kind of piece of it. Can you go after that quote unquote deadweight loss of those two kind of the differences in that curve, so to speak? Can you kind of shorten that curve and can you get paid for it? That's actually something that, like, I think, I don't know if it's venture backable, but there will be a lot of people that do really well in condensing those two lines. Those are kind of the third kind of bucket that you kind of have to articulate. And so, like, the wave of innovation, obviously AI is the thing that is everywhere all at once. It feels, from my seat, it feels like it's this ubiquitous thing that is everywhere, but kind of not anywhere all at once.
Yeah.
Right. So it's permeating our lives. Everybody's telling us this amazing thing. And I think I personally see a bunch of awesome productivity gains, but then I talk to buyers and I talk to practitioners, and there's this gap. There is not this magical thing that solves all my problems. So I think we're in this very interesting time where we're in kind of the precursor to where security kind of has its AI moment, which is fun.
Well, I mean, just hitting on that point, it's actually interesting to bring it up because it was yesterday. I was trying to find a data point on the adoption of AI by business unit functions. Coincidentally, Anthropic has a whole dashboard of this. And there were three or four security oriented orgs. They are in the bottom of the bottom. I mean, basically they're one notch above carpenters, adoption of AI. And there's, it was like 200 business units above the security function. But when you talk to security leaders, they're like, hey, we got to secure this thing. And so there's always this mentality that seems to show up when new technology comes about of I need to secure it versus how do I leverage it to make the security function better? Is that what you're saying?
It's yes, and I would say the and is the other couple interesting data points are a lot of the security leaders that I talk to, it's this board imperative. It kind of gets thrown over. The security leaders forever have always been used to the fact of like, hey, we're adopting this thing, throw it over the fence. Mr. CISO, go figure it out. How to go make it work within our four walls and make sure that no one's going to sue us, right? That's kind of like the time eternal kind of like tension, right? But a lot of people have said like, okay, like we're not just going to adopt it. It's already everywhere. Like our people are already using it everywhere. I'd say we went through the moment, or most enterprises went through the moment of, hey, I'm just going to block this. That's not going to work because your people won't work at places where they're not allowed to use these tools. And so a lot of the times I've been interested in the past 3 to 5 months, the security person has actually been the person that's like kind of been given the board level mandate, like make this work and be the head of the spear of pushing AI throughout our whole organization, not just specifically for security use cases, but help us adopt this stuff as fast as humanly possible because the gains are there. And then Justin, I would say the last thing, which I do think is very interesting and different than different technology cycles, the productivity gains and the speed of productivity gains, it is just faster and faster and faster in this than it has been in SaaS or mobile or like the speed of which this is happening makes this fundamentally different and makes it a really difficult but fun time to be in any of these seats.
What do you think the speed is? Because usually, at least for me, my rule of thumb was whenever there was a wave of innovation, let's take mainframe to client server, SaaS, whatever it is, roughly 7 years after that initial tech comes out, then there's generally market adoption. You start to see security capabilities native into those products and services because they've acquired the startup security teams of sort. You said, hey, maybe this is faster. Is it faster in that life cycle of adoption and therefore, acquisition of startups as well to secure it? Or is it just the adoption of the AI is getting faster than the adoption of SaaS at that particular curve?
I think the adoption of AI is just so much faster than we've all seen, right? Like we all have stories of all the startups where this is not just a Jack releases a post about cutting 20% of blocks FTEs, right? It's not just that, right? Like it's not that we can do more things. Now there's more nuance to that. I'm sorry to just take that out of the headlines.
I'd love to dig into that. I would love to dig into
that. Seems like there's significantly more nuance there than just that, but there is certainly a realm of what he's saying is that there is massive productivity gains here, and we need a smaller, more dynamic team that's AI enabled to be the future of kind of where we're taking the company. But I guess to go back to how fast this is going, I think most of our best companies that are growing really fast, I'd say over 85 to 90% of all the code is written by the machine.
Yeah.
And I remember starting in this job where we used to count lines of code as a moat, right? Like that used to be a diligence item. How many lines of code have they written?
Yeah.
Now, anybody who's written any lines of code and is interacted with best in class technologists actually say that that's the biggest misnomer you could ever think of, because just writing another line of code doesn't mean you're any smarter than anybody. It actually means you're probably not thinking about it. But the machine doing all that, the speed at which that has happened is, I guess, the microcosm for what I think the rest of this next generation of companies is going to look like.
I think you're absolutely right. And if I was going to develop a metric, it's what is the percentage of total code that's automatically created, and what is the amount of human fixes on that code. That is important. And in my 2 cents, in my very small window of the world, the past 6 months, maybe a little bit longer, the accuracy and efficacy, just thinking about Claude Code, has been amazing. I mean, just properly amazing on how good it has gotten. And as a result, the number of engineers, et cetera, to kind of leverage it for the majority of the work. I mean, the other side, hitting the ability to build a company where we're seeing the solopreneur kind of model, really take hold a lot more. But when you look at the AI native companies today, and you and I were exchanging very briefly on one, but look at Harvey, I think they have 500 employees, something around that ilk, and they're doing hundreds of millions in ARR and generation and so the ability to create a profitable company with lower labor overhead demand needs has been. Yeah, that's just one example, but I'm sure
the security think about the security example. Let's just play this out, right? So, previous world, non-AI world, if you asked a CISO, if pen test costs priced to you were, regardless of quality, right? If you could pen test everything every day, every hour, I don't know, depending on who you are, I think you'd probably do that if you weren't going to break the bank, right? But you could not do that. So then that paradigm of what we've agreed to is the gold standard. I'm not going to get an argument about what the gold standard is, but a lot of people believe that if you have an elite pen tester going after one of your most important crown jewels of your company, and you do that in perpetuity, you feel better innately about that. Like, look, the market has spoken on that, right? Audits and also all that sort of stuff. Ask how many times you pen test, how you pen test, and what you pen tested, right? Now in the world of AI, now is it the best pen test that anyone's ever seen? No, but the pricing has come down to such a point that they don't have to make that choice anymore in that similar way, right? So like that, what that paradigm means, and that we can do this autonomously, and we can do this as much as humanly possible. That technical shift, right? So a surface area that we traditionally had, but we're now going to do it in a different way. That is fundamentally going to change a lot of stuff in application security.
Yeah,
right?
but I would push back on, is it better? I mean, listen, I mean, there are very smart pen testers out there, but whether you're doing a bug bounty, a pen test, or even your own internal that's, doing red teaming, et cetera, the labor constraint has also created the ability to go to the nth degree for fuzzing and hashing and all those esoteric kind of things, where in a full automated sense, you could literally throw the kitchen sink at it and have it be a very contextually thoughtful link chain of what is attack A, B, and C to be more exhaustive than what a human is being. So I have seen, actually, we do see the vulnerability discovery and the bug bounties. The AIs are taking the leadership position. I think that example is one not just on coverage and velocity of performing a function, but also on the efficacy, not unlike the Cloud Code, where they're getting, if not better, than the humans were doing it maybe just 5-6 years ago.
Yeah, I think my broader point is that like it's going to this stuff is going to fundamentally make us rethink about these places that we traditionally in security thought about these things as unbelievable commodities.
Yeah.
Right. Like whether I'll say something minorly hot take. Like some systems just say like, yeah, my vuln stuff is kind of like I bake them off against each other and then I pick whichever one's cheaper and then I flip it every renewal cycle. Right. Like it's okay. Some people say that, but like now, can you do that in like a better way? I don't know. Do you do that? Yeah. And by the way, the thing that's very undeclared right now from my perspective in my seat is these markets are all getting kind of upended, but who the winners are and who the losers are and whether the startups are the winners is the thing that like is very, very hard to adjudicate in my seat. That's the hardest place to figure out where the value at the end of the day, where the majority of the revenue and durable revenue sits. That's the hardest thing right now in my seat. As we're looking, we see these companies, they're growing unbelievably quickly. But whether or not that is a durable business is a really, really hard question. It is difficult for us right now.
And I think, and we'll get into maybe a little bit later, but I think that point is really pronounced more for you or GC and GC's size of funds than maybe other funds that are much, much smaller and they're moik. They don't need to have X, Y, and Z because it's not going to, anyway, we'll get into that maybe a little bit later. But I am curious about, are there examples of quality companies coming out of this wave that you've seen?
There's plenty of super quality companies that are coming out of this wave. And I think there's kind of a couple buckets of how to think about them. There's a couple that are like riding the wave of AI adoption, and can they help CISOs be able to basically get their arms around what the heck is going on? And then hopefully be able to give them the tooling to be able to allow everybody to use all the favorite AI that they're using, but make sure that it's, especially in an agentic world, that things are kind of walled off in the right appropriate places. The folks out of Jordy AI that we did the seed of about 1.5 years ago, like they're seeing awesome adoption. And frankly, they're finding things that, and again, it's not dissimilar from what security was before. It's not somebody like thinking they're going to go do something terrible. It's they like by accident, they created an agent that kicked off here and the guardrails weren't perfect before. So it has access to things that it shouldn't have access to. And then you fix it and you disclose it and you go through everything. But Jordy's doing an amazing job really fast with big enterprises across a bunch of different AI solutions, which I think the heterogeneous nature of AI and which model we're using, which tool you're using, like that, I think is going to persist for a while. That's one. The other one is like companies that are unleashing the power of AI. Like these companies could not have existed before, if that makes sense. Method Security is an awesome one. It's a dual use cybersecurity platform, able to basically be the way I describe it is it's an Iron Man suit for the cyber operator that never existed before. So how do you use every single possible type of tool, telemetry, and technique to be able to both play offense and defense? Unfortunately, we live in a fairly polarized world from a geopolitical perspective, and some people who are a little less friendly to the West, like they're playing an offensive game, and unfortunately, we have to do the same thing, or else we're going to be behind. That's a company that I don't think exists in the same way in a previous iteration of the world. And talking with Sean and Sam at Method, like every single day I learned something like unbelievably cool. You and I talked about like they have this awesome demo that at some point we'll hopefully have them on with you, and everybody can geek out with them. They're awesome. But those are like a couple things of like kind of things that we're seeing in these AI native companies. And then look, across not just cyber, but all parts of our organization, investing in defense, traditional apps, whether they're vertical or horizontal, infrastructure, the AI native companies, just watching the speed with which they can execute and move is just really, really impressive. And it's everything. It's marketing, it's sales, it's engineering, it's products. And honestly, these companies are going to look so much different. And we talk a lot about with all our investors here, we have to relearn all these models that we spent years getting data points on and like breaking our brains a little bit about what good looks like. Like it's not just good enough to see X amount of growth or Y amount of margin without understanding all the qualitative stuff underneath of it. And it makes our job, one, more fun, I think, less kind of formulaic based, but two, harder. Because you got to get back to like doing the bare metal sort of stuff and like actually talking to people.
So that kind of takes me kind of the next thing. Listen, our audience is mostly security practitioners, listening to founders talk about their solutions, et cetera. What I'd really love to pick your brain is how you think about and how you execute in that due diligence process. Imagine two guys sitting in front of you, or ladies, of course, pitching their idea. How do you think it through in order to say this is good or bad? And the reason why I bring it up specifically, when we look at security leaders, and they're being pitched to by early stage companies, whether at C or A, maybe at B, they're a little bit more mature in that capability. They don't know how to discern between which ones have legs and which ones don't. And so that due diligence process that you go through is very similar to what they should think about when not just product, but the overall company itself, right?
So, I mean, the first easiest way is if we at General Catalyst have invested, good housekeeping seal of approval. Feel free to move that thing right through procurement. Happy to help. I have quota from all my portfolio companies that I have not retired. So I need their help and your audience's help to do that. No, in all seriousness, I'll put this in two separate buckets. And I'll highlight the tools or the things that we do. We talk a lot about at seed and at earliest stages. The founders are going to lead us to where this needs to go. So we spend almost all of our time on the founders and whether or not we believe they have rare qualities and frankly, rare breaks in their brain that they want so badly to go create this because it's innately unbelievably hard. They have to go convince people in your audience to go take a chance on them in something in an enterprise that's extremely difficult and frankly, probably unbelievably high value. And say, hey, I'm a startup. I just raised a little bit of money from a venture capital firm you may have heard of, but hey, let me have the keys to your identity platform. Or hey, you're our friend Amit at Native Security. Hey, let me get the keys to all of your cloud security. Not just like one, How about all of them? And how about like now? That's really hard, right? So we are judging the founders, so it's a lot of references. Honestly, it's time. The other part is like we will take them and put them in front of people that are in this audience that are listening, and frankly say, is this resonating with you? Would you spend time with that person on iterating on the product back and forth? And honestly, those are the most important conversations, is talking with folks like that. And I think for folks approaching or being approached by early stage security companies, I think one of the things to think about is, and by the way, this is the exact opposite advice I give founders, so we can talk about the other side of this coin. But being the security buyer, it allows you to hopefully be able to tap into innovation that honestly, you might not be number one on the largest platforms list of people to go iterate on product with, but you might very well have a big need and a big gap that you can get an unbelievable talented person to possibly go after and fill that gap for you for probably significantly cheaper than calling up your platform and saying, hey, I really need this feature shipped and I need it fully integrated into what you do. And oh, by the way, like they have tens of thousands of customers and you're probably not their biggest customer. And therefore you can't get things done. Probably the best CISOs I know use this innovation flywheel as an ability to plug gaps. And they basically view them as, yeah, sure, you need to spend a little bit of money, but you can drive the product roadmap really aggressively. And you have these people that like, they are like these first couple customers for these security companies, like they have to be successful. Which is, by the way, the complete opposite of what I would tell one of our founders, which is like, hey, don't let that big first customer own your roadmap. Like, do not let that happen. So the biggest thing for the founders is being able to find that nice like Venn diagram mix of, yes, it's a company that's willing to lean in with us, but second, it's a good fit for where I want to drag the company towards. And that's a harder thing for founders. But I think initially that's what we're spending time on, is it's the founders at seed. And then at A and B, it should be A and B and upwards. B and upwards, it's what we call a growth post product market fit company. The machine needs to be buzzing. It's go to market metrics. It's customer feedback. Does it actually do what it says it's going to do? Do they ship fast? Do they ship other products? Have you used a second product of theirs? Do you care about it? Is one of the big guys going to come out with this? All those sorts of questions are kind of where we spend time. In between, in the A and the B, when they've found quote unquote product market fit, we spent a lot of time with CISOs and making sure that like that this is like true feedback up and down, size of company, type of company, how their company looks as a customer. That's the stuff that we spend the most time on. And then like the last part, Justin, is, does it really do something that fundamentally fixes a huge gap? I'm not super interested in dashboards. I'm not super interested in like another, like, there has to be a so what at the end of it. And in the A and the B, there better be a so what that's manifesting itself, not just, hey, I found this thing for you. It's a problem. Your job now, Mr. CISO. I think we're now in the age where like that CISOs are not, and enterprises are not going to put up with that anymore.
Well, I mean, a couple of things there. One, I was on a panel maybe 2 years ago, a Black Hat, maybe a year ago, I forget what it was. And the question was, product or founders, what is the ratio? And it was me plus a whole bunch of other VC personas, which I don't think I can remove. I've been told I can't remove myself from that.
No, you're in now. We took you.
Yeah, it's a sad day for a lot of people. The answer from all of them was 90-10, 90%. It's all about the founders, doing the due diligence on the founders, et cetera. And then maybe 10% on the market space product. I had a very different point of view, obviously coming from the CISO world, which was, it's like it's like a 90-10 the other way. I focus on the problem, the solution, the product, how is it delivering, et cetera. And I think it was a year afterwards, I'm like, okay, let me refine my answer. Maybe it's 51 49. You know, it's 51, the founder. And I'm getting more and more impressed upon how important it is of the founder's background, mindset, experience, doggedness in a lot of ways to go through that journey. Let's say the first 5 years journey, let alone the rest, where that is the make or break. More to the point where Whitney Buke over at Box would tell me, she was like, no, it's all go to market. Good product, bad product, doesn't matter. It's a go to market that will win or die. And that's really impressed upon me now in regards to how do you select those founders, or how do you identify those traits, and then create a support network around them for success, right? Does that resonate?
For sure. I think like products, especially in cyber, so many of the products overlap.
Yeah.
Right? Like it's like, sure, CyberArk isn't doing endpoint, but like a lot of the other stuff, like it has to integrate, it has to play nice, or et cetera. Or like, sure, we have a SKU that competes with this, but if you really, really want this, we can integrate with it too. You know what I mean, Justin? And I think the best founders kind of bend the world to their view. And I continue to be impressed by that. And then the last part where cyber is different from like founders versus products. I think if you're building in a market where it's a vertical and you're the only show in town, right? Or one of two shows in town, that's different. Whereas if you have the best product in that vertical and you're one of three options, I would assume if you can raise capital and attract enough talent, that over time you should win. If your product is better, like over time you should win. Cyber, everything kind of like overlaps a bit. So it's not just like just having the product at the right time isn't good enough. Right? I mean, you and I can go through, there's tons of history lessons of cyber of where somebody had the lead, right? From a product perspective.
Yep.
And now we look back 5 to 7 years later and that somebody doesn't really exist anymore.
Absolutely.
Right? And frankly, maybe it was a marketing thing. Maybe it was a go-to-market thing, but ultimately it was because the founder dragged the world and their company past that incumbent or that like quote unquote leader at that point in time. So yes, I don't diminish product down to 10%. I probably, if you put a gun to my head, I wouldn't say that.
Yeah.
But I do think the founder is the thing that wins the day for sure.
I mean, the other thing that comes back, I think the product development roadmap is incredibly important throughout a life cycle of the company, and kind of hitting on another point that you said, don't be beholden to those first customers' flights of fancy of features that need to come in. Those were not your words; those were mine. But I remember being at Symantec. I think we did this at Box as well, where you look at all of the features and what were their adoption. And it was like 80% of all the features are not adopted generally across products. I think it's indifferent of products. So how did those features come about? Well, they were big customer wanted feature that nobody else wanted or needed, more importantly. And maybe there's another spectrum around, hey, actually the majority of the market might want or need this, but they're not aware of it because they don't read the README files, when new features come out or whatever that might be. But at the end of the day, there's a large amount of development engineering effort around things that are not materially moving the needle from the customer's standpoint, market customer standpoint, maybe not just one. Does that make sense?
It does.
Yeah.
It does. And then the other thing is, as founders, and the other thing as security leaders, sometimes these early stage companies, the founders are a little bit dogmatic. Like it's like, oh, I don't need this thing this guy keeps bringing up. But part of being one of these early stage founders is you have to have enough guts that like, I have a view of where the world is going. And I know I need to build this now. And I know I need to yell and scream about it for a while such that when it is time, I have it and I'm the thought leader, which is like very hard as a buyer to understand sometimes when like these founders are like, yeah, but you really need this XYZ thing. And you're like, oh, I don't think I need that. Most of the time, it's because they've been so frustrated or they see where the world is going so clearly and they like cannot fathom a world where this doesn't exist.
Yeah.
And they're not right all the time, but the ones that are really right, all of a sudden, like the chessboard starts to crystallize and then it makes perfect sense. So it has to be related and it has to make sense for the first product, but usually the best ones are dragging the world to where they think it's going and they're building ahead of it, which is fun.
That's like me and GRC. Listen, no investor, I think, is going to invest in a GRC solution. That's a bit of tongue in cheek. But man, as a security program management, I'm going to live and die on that one statement. We need a really mature GRC program, big P, to kind of manage it. So if you find one, Mark, let me know.
I will.
Anyway, I will. So, we hit on the journey of the founders. Walk me through, you write a check, right? And it's zero. What does that look like? What are the tent poles or milestones from a founder's perspective in building a company? Again, going to educate a bit of our audience, they might not be aware of what it really takes to get your design partners. Hey, you got to launch the company. You've got to get that first $1 million in ARR. What it takes to go off and then do a fundraise for the next fund. What are those milestones? What does it look like?
I think in the beginning, the things you're like, we'll go from like, I'll track it in terms of like, we create the company, you have a vision, you go raise a seed capital round, which is unbelievably hard in and of itself because you're basically, do people think you're actually going to be any good at this thing? Yeah. And it's so subjective versus objective. It's just, everybody has different taste and the way you do it and all that sort of stuff. That's a separate podcast, not for this audience, but like you get the seed raise done and then you got to go hire the team, which hopefully you've been warming people up in the background to be able to, you can do it with less people now than you could before, but you still need a team. So you got to motivate people to go join your journey. You got to do all that. Plus you got to be recruiting design customers as you're doing that and advisors for getting feedback, right? You got to put things in people's hands. You got to figure out like whether or not it actually works in the way that you thought it was going to work or what's different, what's harder. In practice, is there a blocker at every single company that you have to go get around, et cetera, et cetera. So like doing the design customer sort of thing and then converting those design customers into paying customers is frankly kind of the biggest, I'd say, journey in that product market fit kind of feedback. Yeah, because if the design customers are if they've spent enough time with you, they want to continue to spend time and then they raise their hands and pay, usually to me that signals that like you can go get somebody, there's enough pain there. And if you have enough of those design customers, there's enough pain in the market that people will, if you put enough kind of, I'd say, chum in the water, so to speak, from a marketing perspective or outreach perspective, you'll be able to go get the next like 5 to 10. It might take you longer in varying ways, and you're always on the journey to figure that out. But that's kind of the journey to about $1 million of ARR. And what I would say is that target of $1 million of ARR to raise your Series A is this very fluid thing right now in terms of markets. Lots of fast follows happen with great teams where you lose the seed and you want to make sure you're a part of the company and you're willing to pay up a little bit in order to get on earlier, so to speak. And then there's a lot of times when you get to like $1 million or maybe the companies are growing so fast, they go from 0 to 5 or 0 to 7. Now, not all security companies look and feel like that, but some do. And that's like kind of the other part of the journey is once you have kind of the tiger by the tail, can you then go raise the next round of capital, then try to go do the next leg of the journey, which is kind of the go-to-market fit phase, which is, can I figure out how to create the machine, right? The sales, marketing, product marketing, and the product kind of execution to be able to go and scale the thing to 10, 50, 100 million. And then you're quote unquote a real company. Then you're in like a next phase of growth and learning. So that's like kind of how we think about it. And then the last thing I'll say, Justin, is that we spend a lot of time in the earliest stages of companies is, are you doing the inputs correctly? And then measuring the outputs, obviously, but like, are the behaviors correct? Are you reaching out to people directly as a founder, or are you just waiting for your investors to make introductions to you? Are you personally like hustling and doing that sort of thing? When you get design partner feedback, do you iterate really, really quickly and ship that stuff fast? Are you closing candidates? Are you constantly trying to hunt for more elite talent and try to get them to join you? Are you getting people to pay attention to you? Those are kind of all the inputs that like we're trying, because we have enough data. We've been in business for over 20 years. You just don't know. Very few of these things look like they just stack like immediately. Very few of them do. Of the big winners, a lot of them go through this like volatility journey, which like we're there for the whole time. But the inputs and like doing the right things, that's the stuff that I care the most about. I only get sensitive and kind of start raising my hand and asking a lot more questions when there doesn't seem to be urgency and it doesn't seem to be like we're going fast enough. That's where I get nervous.
Yeah, you hit on a couple of things. I mean, especially in the early stage, I'm a big promoter of founders being very thoughtful about who their lead VC is at the seed stage. Because when you start breaking down the numbers, I think it's, world averages 10 to 20% of your seeds won't make it to A and then, carry on. But it's a very different story when you look at if your seed investor is one of the top, 20 VCs or a general catalyst, that number goes to 98%, confidence that it's going to get their A round and higher. And so, okay, what's the difference? It's what that VC brings to the table by not just, to your point, hey, I'm going to hold you accountable, founder, for doing these things, but also I know what to look for to kind of hold all of us accountable. And also what that free VC brings to the table in regards to their network, their advisors, maybe not advisors, but larger network, the go-to-market connections. I'm a big believer in founders in security. Maybe not having as much CISO advisors, but definitely find some go-to-market, some CRO, CMO. That's the bigger problem when we look at the go-to-market space and what is going to make them successful or not. Are they getting that advice? Do they have resources to kind of really help out? Does that resonate? I know you're a huge fund, so your length in where you go or where you needed to go for that return. But at that early stage, you're really seeing just kind of really knife fight in the street and being very thoughtful in the tactical decisions that they make in those first 4 to 5 years. Is that accurate?
I think I would actually condense it down to like the first 2 to 3 years. Okay. I forget who said it, but it's like, tell me who your first 10 hires are and I'll tell you how successful you were. You know what I mean? It's the unfair advantage that we give is when you're in, it's kind of the company that you keep. Yeah. And so you, Mr. Founder, asking me a question about like, hey, how do I like hire my first 2 AEs? It's like you're getting advice that's been passed down around from like the founders of Stripe and like you're getting into Deer from Armis. Like you get like, I'd say that is the thing, that is the gold that they all want. Like I'm charming enough. Like I'm from the backwoods of Boston, but like there's plenty of us. Like I think I'm fine. Frankly, the founders should should use the VCs and squeeze them for as much as they possibly can. Right. And I think we have more to offer than others, which is why I love to work here. But the things that the VCs actually do is like, I figure out how to go get you the best advice on planet Earth that I can get from somebody who didn't do it 25 years ago, did it like 2 months ago. and is now growing faster than like anything else that we can see. That's number one. And then number two is my job is to raise my hand and tell you like, hey, I've seen this like objectively not work. And here's what it was. Here's what it looked like. And here's why it failed. And oh, by the way, like you can go talk to that guy too. And that's the stuff that I think, and yes, there's signaling, there's brand, there's all these sorts of things. And like we have amazing people helping us to elevate the brands and the companies and the people of our portfolio, which I do think matters. But I think that the goodness and the truly elite stuff comes from us making sure that you're connected with the best possible people that just went through it.
Awesome.
And it's contemporary. It's not like, and I cannot emphasize enough in this time, everything that we just learned for the previous cycle, I don't think those rules hold hard and fast. And seeing the best companies operate today, those rules are completely being rewritten.
Interesting. Do you have one example to kind of illustrate that point?
Sure. I don't think, I think product is going to look massively different in this day and age. Put simply, I believe one of the Magnificent Seven will have 80% less product people than they currently have within 6 months.
Okay.
And if they've made that choice, there is 100% company that will have 90% less product people, but they will be unbelievably fluent in both code, wireframing themselves, getting real customer feedback themselves, and pushing it faster.
I agree with that. I don't know about the first point. I agree on the if it will happen. I'm not sure about the when. And that's obviously always a question about, is it 6 months or is it 5 years? But it will happen.
Yeah.
This is fascinating because I have the same going all the way back to the conversation around security teams are not adopting AI for security functions in a big enough way. The problem with security historically has been the labor challenge. We just can't hire people to do the job we need to. Now we have a technology at our feet that has that contextual capability to kind of do those brain-oriented functions if we can train it, if it gets that efficacy, et cetera, to really get that high automation. So in other words, we can do security at the speed of the business. But when you look at the adoption, it's so low, so security teams are going to get left, are going to go farther and farther behind overall delivery standpoint, and politically, because now if I'm in a company and I'm a CISO and my head of engineering goes, I'm getting rid of 50, 60, 70, even if it was just 20% of the headcount and I can have 2x productivity at the same time, I would look at that CEO and question them if they didn't look at me going, are you doing the same? And so now we're going to be in a political challenge of how is security improving their function and reducing the labor component in par, right?
Yeah, I think security is no longer going to be the place where they just show up and say, hey, we got this new attack vector thing. I need an extra $1 million. And then like nobody, I mean, the best companies historically always asked for and figured out like whether you were getting good return on investment, and the best professionals did. But I think the entire business now needs to justify, you cannot just say we are growing at 50%, so our heads need to grow at 50%.
That's right.
Like that world doesn't, I don't think that world exists. It definitely does not exist for publicly traded companies. You can see it right now in the way that markets price things. And I think it's even more pronounced in private markets.
Well, I mean, yes. And for us, two things. One, I'm going to have at some point in the future, I think it was ahead of the Verizon Deber report, and the conversation we had of if I wanted to mitigate 90% of all those compromises, what are the goals? And then 95 and then 98, there's no 100%. And it was like the same 6, 7 things I mean, it's not rocket science. It's like the
Yep.
same 6 or 7 controls. Make sure you're backing up. Make sure you have coverage of your endpoint software, your CrowdStrike or whatever. Make sure you have vulnerability and patch and configuration management put in place. And so the question comes into, where are we spending our resources and time versus those core controls? And I think there's a chasm in the market. Anyways, that's a longer conversation for another episode. I want to hit on something before we kind of close out. Not a lot of security people understand how VCs work. What does valuation really mean? And what is the impact to them when they think through those products? So for example, let's say I have a company pitching me some product and I look up because I am that guy. Hey, they got 400 million fundraise, their valuation of 2 billion or 3 billion, whatever the number is. And I asked the simple question, can you give me customers? Oh, well, we're still building out our customer base. Should I be worried?
I think it completely depends on what you're trying to have this thing do. Right? So I think the overall question is about, in this sea of marketing, LinkedIn posts, ability to make startups seem bigger than they are, which, by the way, they get coaching from us on how to do it and like all that sort of stuff. As a buyer, how the hell do I figure this out? I think the thing that you can always figure out, and by the way, the best ones are always great at this, is the ones that are just directly through the front door and honest with you. Hey, we're an early stage company. We've raised a whole bunch of money from these great investors. They've done these sorts of things. We have advisors that look like these people that are associated with companies that you may know of. We're asking you, Mr. CISO, Mr. VP of application security, of network security, hey, let me help you with a problem. If you believe that problem is real, and they're through the front door on, I need this amount of time. I need this amount of resources. I need these sorts of things. And then you should ask legitimate questions about, how many customers do you have? How many customers do you have that look like me? And also, you shouldn't take the phone call if you don't see a website with a bunch of customers on it and you're not willing to engage with somebody that doesn't have references. That's okay. Right? Like, and the other thing that I talk to a lot of, and look, I reach out directly to security professionals all the time because I'm always trying to build my network. What I tell them all the time is, there's no expectation of one way or the other. And a lot of them will just blindly take calls because you catch them at a certain time or they have time and I think being intentional about what you're going and trying to look for, I think is important versus just picking something out of the pile, so to speak. I think you need to figure out and map your own needs and also be able to be on the lookout for stuff and then have trusted resources of people that do things similar to how you do them, or people look, whether or not I made the investment, I try as hard as humanly possible to have as much coverage as possible. I should have 1 to 2 smart things to say. And a lot of my peers should be able to say 1 to 2 smart things about individual spaces as well. So I think there are ways to do it. I think setting up these calls is an important thing versus you get on the phone. Look, we back them to pick this skill set. If you get on the phone with one of our founders, they're going to try to close you as a CISO. And they're going to try to tell you what you want to hear. It's your job to drive the conversation towards what you need.
Well, I mean, to that point, my question was really wrapped around, we're seeing huge valuation increases versus historical stage and revenue multiple, right?
Yep.
Should we be concerned? And have we seen this pattern before? And how did it end up? Maybe that
we have a meta venture capital question. So I think what has happened, if we take the end as part of the symptom of the broader problem, Justin, Amazon, HubSpot, Google, if you look at when these companies IPO'd to where they are today in terms of market cap, right? there have been 10, 100x valuation jumps in those companies since they went public, right? I think HubSpot went public at HubSpot is one of the companies that we were very lucky to be a very early investor in. So I just remember, we know it from memory, but roughly about 300 to 400 million of ARR when it went public, right? We have multiple companies that are well over 850 to 900 million of ARR today in the portfolio that are still private, right? So I think the valuation jumps that you are seeing are reflective of a world where private capital, companies staying private longer, they have access to more capital than they did previously. They don't have to have the onus of reporting quarterly to investors. Right?
That's one category, which I completely agree. We have a lot
but that's what all of us are chasing, right? So we're all chasing these things. So they're being marked like they could be one of those. And that is what's happening. And that becomes this quote unquote inflationary exercise. I think for the best companies, I actually think it kind of is what it is. It's okay. The issue is that there are so few of those. And we're kind of treating it like there are hundreds and hundreds and hundreds of them, and there are not.
Let me put a brass tacks on the cybers. So I broke down 2025 exits. There were roughly 400, and I was using momentum data. So it being what it is. I think, everybody talks about Wiz at 32.
Take it out.
But at $1 billion or more, there was 4, right? I think the average exit, and there's a law of not knowing because a lot of the data is private. It's not like that. I think that's important. But I think the data showed that it was on average 150 million was the exit. And I think the rule of thumb was somewhere between 100 and 600 is the window of a M&A. Sounds right. So when we have a company, and maybe this is anecdotal, you tell me. I heard of a cyber company still in stealth, no customers, seed stage, got preemptive an A, and it was 100 million in, which I assume the valuation is 5 or something, 6 or something, kind of on the exit. No revenue, nothing. That seems like an anomaly. Your thoughts? I mean, I don't know, I'm throwing general things at you. Maybe it's not fair, but I think it seems to be indicative of the current market where we're seeing a lot of money go in, inflating the valuations. I think part of our job is to be disciplined on valuation and amount of capital that we're putting into companies. The other half of our job when it comes to this sort of thing is we need to play the game on the field, right? And the game on the field is that there is a willing buyer at that price. And so you have to figure out whether or not you're willing to play at that price. And I think for me, where I come out is I'm willing to do that in very, very few cases. And the bar just gets higher and higher and higher. And this is I don't think this is that controversial, but I'm willing to play the game with those. But to put a number on it, I'm not going to try to go do 10 of those. I don't think, personally, I don't think there are 10 good enough cyber ideas at inception stage to combined with A+ teams to command valuations that look like that. I would love to have that much. I would love to have that much conviction in 10 teams, Justin. I just don't think I will get there. Well, I don't even know if there's enough buyers on the field to support 10 teams, even if they were the best and the brightest, and capable. And so, I think it's an interesting thing to watch, and the whole valuations of 2019, it seems to be different reasons.
But just to give to pick on one very specific example, so that your audience sees this, it's okay, Nir Zook, founder of Palo Alto Networks, right? He's going to go create something new. He created freaking Palo Alto Networks. That's, and he's going to command an enormous round. And by the way, he did. And that, in our seat, it's kind of are you going to bet on the guy that sounded like that? Or are you going to bet on the guy that comes out of Anthropic or OpenAI or DeepMind and to the tune of whatever the price may be. I would say like that's just to give your audience like kind of the seat of where we are, right? It's the guy who created Palo Alto Networks is going to go create something from scratch using AI.
Mm-hmm.
Our job is to like these one-of-one people. He's already done the one-of-one thing. Now, like you have to go figure out whether or not he has enough like fire in the belly and all that sort of stuff to go do the thing. But assume you do. Mm-hmm. That's a hard decision to make.
Well, no, I completely agree. And honestly, if Nir goes off and does this, and I don't know Nir personally, so just to kind of declare that, which that's a long story. Anyways, so if he goes off and does something, knowing what it takes to build something after building a Palo Alto, and I'm sure he's got a very healthy bankroll behind him where he doesn't have to do anything if he chooses not to, but he chooses to do something, that's probably a very strong statement of that fire in the belly. You know what I mean?
Huge.
So yeah.
Huge.
Yeah.
Huge.
So Nir, you should reach out. Happy to connect you in with Mark. Yeah. Awesome. Hey, Mark, thank you so much for your time today. I really do appreciate it. We kind of walked through a bunch of different things. I don't know if there was anything in addition that maybe kind of came top of mind, or if anything at all that you want to talk about, or.
No, I just think this is probably, so I said no, and then I really mean yes. I think this is the message to the CISO and like the buyer community. Like, this is one of the most interesting times I've seen. There's going to be amazing companies built that do absolutely amazing things for you. They're coming. The quality of founder is unbelievably high. The speed and the quality that they can build with now, with all these tools, is just mind blowing. Like, Justin, I don't know about you, but like I see a demo a week of something where I'm just, oh my, how long have you been working on that? And oh my God. And some of them come from my portfolio and others' portfolio within GC, and the others are like kind of pitches and things like that. We're in this really fun time. Really fun time. And it's confusing, and it feels like you're in the middle of a hurricane at all times, but it's the most interesting time since I've been doing this by leaps and bounds.
That's amazing. And if you ever have take your kid to work day, if you kind of drag me along, I'd love to be that would be amazing to kind of see it. But I can only imagine. I see my small piece. I can only imagine what you're seeing from a horizontal across the industry kind of perspective. If people wanted to reach out, I'm sure they can find you on LinkedIn and other places.
Yep. Very, very available. I'm pretty sure my email's all over the place. It's quite easy. I'd say, Justin, you've been on a board with me. My number one available as a outside of the backwoods of Boston kid, just to circle this the whole way through. As the greatest coach in the NFL history always said, Bill Belichick, the number one ability is availability. As a venture capitalist,
it was going so well. You got to bring that up.
As a venture capitalist, the number one thing you can be is available and respond. And so if anyone wants to reach out, I'm more than happy to chat with anybody.
Awesome. Hey, Mark, thanks so much. And really appreciate your time.
Thanks, Justin.